Hello friends, you're welcome once again to our YouTube channel. You're welcome so much, and today I want to show you a very important concept you should know in order to improve your trading. This concept is very important, and it has been a defining factor what has helped me in trading and taking trades that are very profitable. You used to wonder, for those of you that are in my free Telegram channel, you will understand that this last week we killed the market. We actually killed the market. Most of our setups played out. The market respected most of our setups. Okay, and some of you are wondering, how do I get those points? How do I get those points? How do I get the best trade entry points? Okay, some people are looking at how do I know the right zones, or the right zones, the best zones that actually work out. Okay, how do I actually get the right zones that actually work out, the right zones that play out? So in this video, I want to show you the secrets. I want to show you the secret to my getting the very most profitable and the high probability zones, that when you take trade from those zones, those are the best entry points to a market. When you take trades from those zones, you are almost guaranteed that the market is going to play out, as you can see. So if you're here to join my Telegram channel, the link to the Telegram channel is in the description box of this video. And if you are here to subscribe to this channel, kindly do so. What are you waiting for? Subscribe to this channel so that you can be alerted. Also turn on the notification bell, so you'll be alerted when I post new videos. I post a new video every week. So you want to join the train. You want to join the train of profitable and professional forex traders that are making money from the forex market. So you need to follow me, subscribe to my channel, view my videos, join the free Telegram channel. There I post chart analysis almost every day that I see good setups. I post with you. So that is it. Actually, let's go straight into the video for today. So today I'm telling you, I want to show you the best trade entry points, as I said, for your demand and supply zones, or your smart money concepts trading. So the best zones, the best place to take zones, the best entry zones to take, the best place to take trades, and they'll work out for you. Okay, so you need to knowing the best zones or the best place to take a trade is very vital, and it will actually contribute to your success rate or the probability or the win rate of that particular trade. You need to understand that not all demand and supply zones are the best zones. Not all of them are worth putting your money on. Not all zones are worth placing your bets. Not all zones are worth placing your bets or taking trades from. So that is why I want to show you the zones that actually work. I want to show you the zones that work, where you should be taking trades from, your target, where you should actually be taking trades from. So before you can be able to understand the best zones that work, you need to understand three concepts. To understand the best zones that work, you need to understand three concepts that will help you to take best zones. The first concept you need to understand is market structure. You need to understand market structure. Second thing you need to understand the concept of mitigation. You need to understand the concept of mitigation. And the third thing you need to understand is the concept of break of structure, which is as well related to what I said initially, to the first one, which is the market structure. So you need to understand these three concepts. Once you understand these three concepts in depth, it will be much easier for you to take the best zones. Once you understand the concept of market structure, the concept of mitigation, and the concept of break of structure, you'll be on a better pedestal to taking the best trades that count in the market, or the best trade that will yield profit, or the best trade that will actually play out or has a high win rate. All right, so I've made video on each of these concepts. I've made a video on market structure, I've made a video on mitigation, I've also made a video on break of structure. So you would want to view those videos. I'll link those videos in the description box of this video. Okay, I'm going to link the link to these videos in the description box of the video, so that you can be able to use them and understand them in depth, so that it would play a very important role in your trading. But that notwithstanding, I'm going to be explaining what each of these concepts mean briefly. If you want to get a detailed explanation to them, I've linked the videos made previously on them on the description box of the video. So kindly take your time to view them. These are free videos. Take your time to view them. These videos, I've made them free for you, but they are important concepts that took me years to understand in this business. All right. So first of all, what is market structure? Market structure can also be referred to as order flow, or can also be referred to as trend. Okay, so you can either call it market structure. In smart money concept, we call it market structure. Institutional trading, we call it market structure. In ICT, they call it order flow. In the retail traders call it trend. All right, so whatever name you call them, they are all the same thing. Market structure is the same thing as order flow, is the same thing as trend. So you need to know the trend of the market you are in. The first thing you need to do when you take any chart, when you open your chart every morning, okay, if you are trading the London session or whatever time frame you are trading, or whatever session you are trading, you need to understand, you need to check what is the trend of this market. Is it in a bullish trend? Is it in a bullish trend or bullish market structure, or is it in a bearish market structure? So when a market structure is bullish, you should be looking at taking bullish buy trades, and when a market structure is bearish, you should be looking at taking only sell trades, so that you will not trade against the market flow or the other flow or the trend. You've heard this countless number of times that the trend is your friend. You've heard that statement. The trend is your what? The trend is your friend. So when you trade against the trend, you are setting yourself up for failure. Each time you trade against the trend in the market, you are setting yourself up for what? For failure. So you should always find out the trend. And how can you know the trend? How can you know the trend? Now you can see this is market structure. This is market structure, bullish market structure, bullish trend. How do I know? In a bullish trend, the market is creating higher highs and higher low, higher highs, higher low, higher highs, higher low, higher highs, higher low. You don't need an EMA. You don't need moving average. Some traders only use the the indicator, the moving average indicator, to know. When I started trading earlier on, that is what I used to know the trend. When the price or the candlesticks are above your moving average, it most times signifies that the market is in a bullish trend. And when the candlesticks or price is below your moving average, it most times signifies that you're in a bearish trend. All right, but sometimes what if the market is crisscrossing your moving average is crisscrossing the charts like this? So which trend would you now call it? So that is why you need to know how to also trade even without indicators. You need to identify your trend without indicators. So for a bullish market structure, or a bullish order flow, or a bullish trend, the market is making higher highs, breaking structure. This is a break of structure. This is a break of structure. This is a break of structure. Okay, market is making higher highs, higher low, higher highs, higher low, higher highs, higher low, higher highs, and higher low. Now, the opposite or the reverse is the case. The flip side is the case for a bearish market. All right, you can see here, this is higher high, higher low, higher high, higher low, higher high, higher low, and so. But for a bearish market, you see the market makes lower low, lower high, lower low, lower high, just like that. Lower low, lower high, lower low, lower high, lower low, lower high, lower low, lower high. All right, so this is what? This is a bearish market structure, or order flow, or trend, bearish trend. All right, so you can see now the market made lower low, lower high, lower low, lower high, lower low, and lower high, just like that. So this is a bearish order flow or bearish trend. So you need to understand this concept to know this is the first concept you need to understand. I've explained it in detail, more detail in the previous video. I'm going to be linking in the description box of this video. All right. So this is the first concept you need to understand. So let us move to the next concept. I just showed you what the market structure is. Let's move to the next concept you need to understand before you can know the best entry points to take trades. Now, the next concept is the concept of mitigation. Mitigation. Okay? The concept of mitigation. Now, by the way, if you want to join my one-on-one mentorship course, I do run a one-on-one mentorship. Some persons are currently taking my one-on-one mentorship training. Okay, I do it at a very subsidized rate. If you want me to mentor you personally, take you one-on-one, all right, I'll take you, train you until you become a profitable and a professional forex trader. My contact detail is in this Telegram channel. It's my free Telegram channel, and in that Telegram channel, you're going to see my contact details. All right, so contact me. I'm going to take you by the hand. I'll be patient with you from the basics of forex trading to the complex form of forex trading until you become a profitable forex trader. So do contact me now. All right. So mitigation. What does mitigation mean? Mitigation is the process whereby the market or price comes to fulfill open orders. All right, open orders. When institutional traders or institutions come to fill unfilled open orders, all right, before the market proceeds in its intended direction. That is mitigation. That is the concept of mitigation. All right. So now, when you have up higher high, higher low, just like that, now the market is this broke structure. The market is supposed to, we expected that the market will come back to do what? To fill this order. All right. So this is mitigation, whereby the market comes back to satisfy an order or to fill an open order, whether a demand zone or a supply zone. This is a buy trade from here. Now for a sell trade, you have something like this. The market break structure. You are having that the market is supposed to come back to do what? To fulfill this order. So this is mitigation. This order has been mitigated. This order has been mitigated. This one was not mitigated. This is unmitigated. All right, this zone was not mitigated. Unmitigated. This was mitigated. This was mitigated. Here, this was mitigated. This was mitigated. This has not been mitigated. So this is the concept of mitigation, whereby the market broke structure. We have understood market structure. The market broke structure, and you're expecting that the market should come to do what? To mitigate or to fulfill an open order. Go to my previous video. I'm going to link in this video to understand it in details. All right. So the third concept we'll be looking at is the concept of break of structure. If you pay attention when I was describing the two concepts above, you should understand it already. So break of structure, the market creates a higher high and higher low when a bullish phase. This is a break of structure. This is a break of structure. This is a break of structure. When the market pulls up above the previously traded high, you call it a break of structure to the upside. This is a break of structure to the upside. This is a break of structure to the upside. Now for a bearish phase, you find that the market breaks structure to the downside, break of structure to the downside, break of structure to the downside, break of structure to the downside. The market pushes below. The market retraces and pushes upward. The market creates a high, retraces down, and push above the previous high. Retraces again, push above the previous high created here. Then the market retraces again and pushes above the previous high created. In a sell scenario, the market sold down, created a high, a low, retraces back, and sell below the low, retraces back, sell below the low, creating another break of structure. The market retraces back and sells below the low. So this is the concept of break of structure. So you need to understand the concept of break of structure if you would understand the best entry point. So now, with all these concepts explained, with the three concepts explained, we talked about market structure. We talked about, this is also called the order flow or the trend. Now the second concept I told you about is the concept of mitigation, and I've just explained the concept of break of structure. All right. break of structure. So with these three concepts now, this should help you to identify the best entry point. These three concepts I've just explained now should help you to understand the best entry point. Okay, let us see. Now, how do we get the best entry points? That's the next topic I'm going to share with you right now. How to get the best trade entry points. All right, how do you know the best trade entry point? Number one is to identify your market structure. So that's the first thing. When you open your chart, identify your market structure. Are you in a bullish market structure, or are you in a bearish market structure? Are you in a bullish order flow, or are you in a bearish order flow? Are you in a bullish trend, or are you in a bearish trend? All right. So once you've identified your market structure, the next thing to do is to identify the zone, the last zone that caused a break of structure. The last zone that caused a break of structure. You need to identify the last zone that caused a break of structure on your chart, on the market structure. Okay, so the third thing you need to do is to wait for price to come to the zone that caused the break of structure. All right, wait for price to come to the zone that caused the last break of structure. Now you need to understand that in the line of the trade, when you are waiting for price to come to the zone that caused the break of structure, that could be what is called the liquidities in your part. Okay, I'm going to show you in the chart. There could be liquidity, so the market might take out liquidity before coming to the zone that triggered the break of structure. So the fourth thing to do, okay, when price comes to the zone that triggered a break of structure, now look for trade entry confirmations. Okay, look for trade entry confirmation. So just these 4 steps. All right, so first thing, you need to identify the market structure. Second, you need to identify the last zone that caused a break of structure. The third thing, wait for price to come to the zone that caused the break of structure. The fourth thing you need to do, first step you need to do, you need to take, is to wait for price. When price comes to the zone that triggered the break of structure, look for entry confirmations before you take the trade. All right, so I'm going to show you in a live chart. I'm going to show you in the chart right now. I'm going to show you what I mean on the chart right now. Let's go to the chart. Let's look for an example. There are several examples. I just marked some out in order to make the video not too long. All right, I just marked these ones out so that the video will not be too long. If you're here to subscribe to this channel, please kindly subscribe to this channel. All right, subscribe, turn on the notification bell, give this video a thumbs up if you like it. If you feel that you are learning something from my videos, give them a thumbs up. Let me know in the description, in the comment section. And also you can as well join our free Telegram channel, and the link to that channel is in the description box of this video. So let us look, for example, like in this case now, you can see here, you can see that this is like a bullish phase. And what happened? You can see the market created a high, retraces, and continued to buy, and broke. At this point, this high was broken. All right, this high was broken. So your trade should be here. You are looking at taking a trade from here. Once this high is broken, your trade should be at the zone. This is the zone that broke this high. So once this high was broken, now you mark your zone right here, and you can see that when price came to the zone, the price bought. There was an entry right here, stop loss right here, entry right here, and your take profit should be just at the previous high that should be broken. All right, so this is an example. Okay, that's an example. Let's go over it again. The market made a high, retraces, broke the previous high here. Now we mark our zone. At this point, the market came back to that zone. We saw some form of entry confirmations and we bought. Our take profit should be just right above, just at the previous high, the high that was created. This should be our take profit TP. This is our entry. Okay, and this should be our stop loss just below the zone. All right, so this is the first example. Let's look at other examples. I've marked. Okay, like you can as well see in this case, this is a break of structure. The market broke structure. All right, and now we mark this zone. The market came impulsively into the zone, and you see bought. This should be our take profit. This should be our entry, and this should be our stop loss. You see how it worked out. Now this one also, the market broke structure right here, and now this should be our zone, because it was the zone that triggered the break of structure. And now the market came down to the zone and bought. TP, entry, stop loss. Okay, here as well you can see the market broke structure, the zone that broke the structure, a buy scenario, stop loss, entry, and your take profit target. Let us see if we can see the sell scenario. These are buy scenarios. These are buy scenarios. Now let us look for sell scenarios. This is one of the most important video you would ever watch on trading. Now, because it helps you to know the right place to enter. Now you see here there was a break of structure right here. These are liquidities. This is the zone that triggered the break of structure. This is a zone that triggered this break of structure. So this should be our point of interest. We call this POI, our point of interest. And you can see that the market came, took out these liquidities and tapped into the zone. Did not really come into the zone, it just tapped into it. Sometimes it happens. The market might not come into the zone. Sometimes the market could just tap into the zone and sell. You can see how the market tapped into the zone and sold out. So this is our TP target, the previous low. All right, these are TP targets, TP. This is our entry, and this is our stop loss. Beautiful trade, lovely trade. Right, now let us see another example here. Another lovely example. Market broke structure here by this impulsive move, now creating a high probability zone, supply zone. By the way, there are liquidities as usual. The market took out liquidities, came into the zone, give us some form of entry confirmation, and now sold. This is our TP target, this is our entry, and this is our stop loss. Beautiful trade. I've just showed you this trade. This concept is one of the most important concepts you're going to learn when it comes to trading the forex market, and the smart money concept. Okay, a lot of people charge hundreds and thousands of dollars to train you on this, but I'm showing you all for free. But in my one-on-one mentorship, you're going to learn more. I'm going to teach you more about this concept in my one-on-one mentorship. All right, so do subscribe to my one-on-one mentorship program, and you're going to learn more concepts, more secrets to trading the forex market profitably. All right, now this particular setup I shared this week. I shared this setup this week in my free Telegram channel. If you go to my free Telegram channel right now, you're going to see that I posted this setup on Euro USD and it played out, and I showed you the before and after. I showed you the before and after, of this video, of this setup. You're going to shake, you can shake it out and you're going to see this. So here the market broke structure. There are liquidities along the way. The market came to the zone and impulsively just tapped into the zone and sold. Some people in our free Telegram channel, I believe they made profit. These are TP targets. All right, the market hit TP. All right, and this is a stop loss. This is an entry. All right, so this is the concept. So when you join the free Telegram channel, you're going to be seeing, if you can go to the free Telegram channel right now, you're going to see that I posted this setup this week, and you see how it played out. I showed you the before and after of this setup, and this is how I'm just showed you how I get setups. All right, so when you come to the free Telegram channel, you're going to be seeing how I post these setups, and you're going to learn from that. All right, and if you want to learn, if you want to take your trading to a higher level, you want to learn trading, profitable trading, you want to become a pro expert trader, you want to become a successful trader, subscribe to my one-on-one mentorship program. And one thing about my one-on-one mentorship course is that I take you by the hand until you become a successful forex trader. How do I do that? I believe that each individual has their own each individual has their personal, their own unique learning curve. Okay, some people are fast to learn, some people are fast learners, while some are slow learners. But I don't care whichever one you are. I take time to identify your learning deficiency and your learning rate, and I stoop down to help you to learn at your own pace. That is why I do one-on-one mentorship. I don't do general mentorship, because when I do general mentorship, when you do general mentorship, only a few in the class will learn faster than others. So that is why I love doing it one-on-one. So one-on-one will help me to identify your needs and satisfy your needs, and your close all the knowledge gap you have when it comes to trading, and you become a profitable forex trader. So if you're here to join the free Telegram channel, the description box of this video, in the description box of this video, you're going to see the free Telegram channel link. Join that free Telegram channel. You're going to be seeing free setups. I post free chart analysis every week, almost every day as they come, as I see them, as I identify them in the market, I post them, and I help you to trade profitably. But if you want to learn how to fish, okay, instead of taking setups from me, you want to learn how to get these setups, join my free, subscribe to my, it's an investment you're going to make. You're going to enjoy this investment forever, as long as you live. You're going to be grateful that you joined made this investment. So kindly subscribe, kindly contact me on my Telegram channel, and I bet you will never ever regret doing that. So till I come your way next time, do have a wonderful and a blissful day.